MIT finds a Tesla Semi Chip challenge. With Tesla's $800 million loss, is Tesla just rolling with a bunch of strippers as to why they had that loss? And then finally, it's Friday today, the 31st of January, 2020, and we also go into a review of trading issues that come up, one, because it's Friday, and two, because of Tesla's large earnings. So, this is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. So, I also wanted to make a note that we appreciate our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So today's show starts off with what we call the $800 million worth of strippers that are at the Fremont plant. The reason we call it that is that the news reports that came out after earnings indicated that while Tesla made $105 million, the fact that there was another loss for the whole year of over $800 million was a sign that the company sort of doesn't have its act together. And so we were intrigued to figure out how sort of the hedgers and others would find a negative in the fact that Tesla did have a profit, and how sort of the news was going to be handled, and whether or not it would actually show up with some positive comments about Tesla. And so what came out was Yahoo and a number of other places were hyper-focused on the $800 million loss. And we thought this was really kind of fascinating because, it's one thing to have an $800 million loss and you have a large amount of ridiculous expenses like strippers or cocaine or other activities that you might have been involved in that generated that loss. The opposite of that is, what about if the loss that was generated was helping to build out a structure for where the company is going? So in this case, what we're talking about is the fact that we now have the Y coming out. We now have the Semi due in 6 months, and we have the Roadster that's lurking. So one of the challenges that Tesla has is that there are a large number of new products that are arriving, and you have to spend to build out. For example, the Model Y is getting a new line at the Fremont factory. So there are a large number of expenses that you're generating that don't necessarily generate revenue until you start selling those vehicles. And all of the vehicles that I just described are in a developmental phase, and we're finally going to start seeing some Model Y revenue, but there's still some other projects that are consuming capital that have not started paying off in terms of large numbers of sales. So it's our conclusion then that yes, indeed, Tesla did spend the money, and yes, there was that loss, but I think it has to be properly weighed against what was done with the money, and was what was done with the money accretive or beneficial to the company. And when you look at the long product list that's coming up, be it the, we don't have to go through the review because I think you already know at this point, the truck that came out, the Cybertruck, the Semi, Roadster, and now the Model Y, all of those are developmental costs that don't have large sales against them. So this is how you can end up with a company having a loss. So I do think it's interesting to have the media being on the attack in one way or the other, and not necessarily embracing the success that the company's having. But one could say they might be getting paid for that negative perspective. Clearly there are other data points one could have focused on. Growth to 367 million units, a plan to be over 500,000 units by the end of the year. There's there's a long list of data points that arrived, and it was interesting to see what was chosen to be the focal point. The final point on this that I was fascinated by was that there's an analyst that has Tesla as one of the lowest targets of any. He's at a company called Roth Capital, and what he articulated was that, he's been exposed to companies and stocks like Tesla before, and one of the things you should note is while the updraft of the value of the stock could be rather rapid, the downdraft for these companies on negative activity or news can be equally as rapid in terms of giving up those gains. So I thought his comment was interesting because, number one, he's been clearly negative at this point. He has a 50,000 unit target for the Shanghai plant for the year. Sort of every metric possible has been negative, and I found it interesting that he keeps getting rolled up by CNBC and others, and then his comments are rolled to other media outlets, and are not that it dramatically affects the stock price, but I think the negative sentiment can definitely influence people's mindset in terms of looking at this purchase. We're 2 days away from earnings, as you know, and right now the analysts are really scouring all the data that came out to figure out, what their recommendation will be to the large institutions, and therefore start influencing what happens with the stock price going forward until we have the next sort of decent quality piece of news that comes from the company. So it's our sense then we're going to get an answer starting Monday or Tuesday in terms of what the large institution thinks about where Tesla is currently and where it's headed. And, I'm not allowed to say this, but I just want to point out that I just think that there's different quadrants of investors. One quadrant is clearly the hedge funds and those guys, and they move very quickly on news. But the other quadrant we always talk about is what's happening with the large institutions that control 60% of the stock. And once we find out what their movement is, the hedge funds really have to adjust to them because of how much money they're working with. So in my humble opinion, I do believe that sort of the stuck point of the stock price, sub 650 on the top, back into the 620s on the bottom, I think we're going to see a nice sort of breakout driven by buying from the institutions that are sort of coming in, is what I'm expecting to happen starting early next week and continuing for a while until we figure out whether the hedge funds are going to give up or not in terms of the shorts that have the stock in their sights. So obviously we'll keep you posted. It's one of our focal areas to concentrate on. The next item we wanted to cover relates to our Tesla Semi coverage. So we have an advisor to the show. His name is Lyman Taylor. Lyman is a good buddy of mine from Stanford. He is a PhD from a place called Georgia Tech, which is one of the top research universities in the world. But he actually did his undergrad at MIT, so I always refer to him as our MITFID, which is a PhD from MIT. And so we had a conversation or a review with him regarding what was going on with the chipsets for Tesla. And he's the one that sort of highlighted to us, based on the ordering process that was going on, the fact that this is when Model Y would likely come out, and we reported that news, and it turned out to be accurate. So again, thanks for the help on that, Lyman. Another item he brought up I was reviewing earnings with him, et cetera, and he sort of reviewed several interesting points on the Semi regarding its chipset. So basically, all of Tesla's cars have two 100-volt chips that run the cameras, I guess one for each side of the camera. And the issue is that when you go to the next stage of chips, you could get as much as a 20% power reduction in the amount of energy consumed by those chips. So that's one of the reasons why people make the redesign and transition to the next. So if you look at the phone in your hand right now, or next to you, what you'll notice is that that chip in that phone is approximately 3 years old. So there's a cycle of typically those chips are sort of refreshed on 3-year cycles for a bunch of reasons. A couple of key ones are, number one, you have to redesign. Number two, you have to produce. And if you produce at scale, you want to make a certain number, and you sort of wind through that inventory prior to making your change. And so one of the challenges that pops up is if you have a product like the Semi, in this case, that's 3 years from when it was introduced, you have this decision to make. A, do you stick with the old chipset, or B, do you sort of wait for or implement the redesign? And not only do you have to do the redesign that comes with the chip that's coming out into it, but you also have software that supports. And so this is an interesting circumstance because, you know, the discussion was 17 cameras on the Semi, whereas there are only 8 on, you know, the standard cars that are moving around. So basically, in theory, we're running 4 chips, and we're looking at 100 volts each. And so a 20% power reduction could be significant in terms of, you know, impactful use of energy that's not occurring. So sort of the truck is in a dilemma, and we could kind of see maybe why we're seeing a longer delay than normal, because you actually have to, if you decide to go with the newer chips, there's a rewrite that has to be done to support the transition to that new chipset. And so, you know, it's our sense that this might be one of the reasons why the Semi was delayed. And I think that for the large corporate customers who are targeting it and some of the advanced functionality that they're looking for those chips, it kind of makes sense to make the transition. But there are cost-related issues to this that are sort of capsulized in delays, etc. So we wanted to kind of review, you know, what he reviewed with us. Another data point he pointed out was that, you know, while the analysts that presented talked about TSMC being the producer, he suggested that he thought actually Tesla was getting that chip from Samsung. I kind of like the Samsung assessment, one, because they're one of the only 2 other than Intel that are building at the 5 to 7 nano size. And 2, Tesla's actually sourcing the batteries for their ground-based power walls from Samsung. So I think the money stays within one building there if you have Tesla doing both chips and batteries from one entity. I think it perhaps gives them a larger, you know, purchasing activity, which is you know, which might influence that whole situation. So what we wanted to do is, whenever sort of stuff pops up related to the Semi, we always enjoy making sure that we bring forward what the conversation might look like. Now, the final thing we're going to cover, which we didn't on the front end, is there was actually news that came out yesterday where on Wednesday it was announced that Tesla had signed a deal with both CATL and LG. The Nanjing plant in China is supposed to produce the LG batteries for Tesla that will be going into the Chinese-produced vehicles. So for those of you who predicted this was the case, I have to give you credit. I disagree with that decision, but I think that it makes sense. If that, you know, so a few of our viewers pointed out that, you know, the news had been popping regarding those 2 being the likely producers of batteries for Tesla. Number one. Number 2, it was pointed out in August is when the contract was signed. So in theory, because it was a while ago, I think that the relationship and how it's going to work has likely been tooled up so that you can get, you know, start getting battery inventories in a timely manner in light of when production has started, etc. So so that's the basic news. I'm a little bit disappointed because I just feel like the larger the percentage of Tesla's supply chain, particularly in technology like batteries, I think the higher potential that competitors within China end up with Tesla's solutions more and more based on the ability of domestic producers to sort of replicate what Tesla's up to. And this further goes to this whole discussion of, you know, at least once every 4 shows, there's a discussion of what's happening with Maxwell, as well as, you know, some of the other innovations Tesla's doing in batteries. And one of the question marks is, you know, why would you want to hand over paid for innovations that are going on in your labs to competitors in light of the fact that they end up baking them in and potentially compete with you on it? So in particular, the CATL relationship, I think is problematic, but LG as well, in terms of the potential for Tesla competitors to start benefiting from the Tesla-LG relationship in terms of what they're producing for Tesla and it being asked for by competitors. So we'll see how all this plays out. There is an issue with volume of batteries, and one of our viewers just highlighted the fact that the delay in sort of battery ramp is a big issue when it comes to the Semi. I mean, that's an excellent point that was shared. It's a high likelihood that that's the case. And, you know, at this point, you know, I found it interesting because one of the low-lying fruit in terms of how and why the battery situation has worked out the way it has is it seems that when you look at what's going on in the Gigafactory, the working relationship between Tesla and Panasonic includes what seems like Panasonic is producing the batteries. They once they do the handoff, it's basically 2 separate companies selling products between themselves. And so one of the challenges that seems to lurk is that if Panasonic ends up with too much of anything, they have to eat those losses. And I've been very surprised to see based on the conversation with the head of that plant, that Panasonic and Tesla don't have if you guys order it, we'll build it. There seems to be if you build it and we don't need it, you have to eat it plan. And so it's exciting to see the Model Y arriving, because Panasonic indicated that they were definitely investing in manpower and equipment to increase production at that plant. And I think that this is good news, but it just seems like the production volume of batteries is trailing what's actually needed by the plant, and I think that's unfortunate. But I'm also glad to see Panasonic doesn't get jammed in this process, and they're able to ramp production as we're heading into the Model Y and the other vehicles that are being produced. So we look forward to more on this, and we'll update you as we get it. The final thing I wanted to review today is that we're in sort of day 2 after earnings. So as we've talked about before, the analysts need a few days to go through the data that they've collected from the new earnings announcement. After that data is collected, you then have a process where they write the report, ship it over to their large institutional friends, and then they have committees driven by what those reports say that determine how they handle their positions. We think that, on Monday, which is the 3rd day out, is when we'll start seeing movement by the large institutions to accumulate more ahead of all the heavy-duty, production that'll be going on for Tesla. That's included with new products like the Model Y's arrival. So, I just think that there's a lot of great products that are on the way. There are a lot of products like the Cybertruck that's not even accounted for in terms of the large number of vehicles that are in demand there as well. So it'll be I think it's going to be an interesting few days next week. I think I'd encourage you to consider on the low dip today. If you're going to pick up shares, it might be a good time to do so, because I just think that once they start weighing in, and the fact that they tend to operate on longer horizons than the hedge funds do, it allows them to sort of step in and start picking up shares. And I think that the hedge funds kind of get dragged along in that case, where they may not be currently, because we're kind of in this interesting phase of just post earnings. There's a bunch of options that expire today, and the market makers have a heavy incentive to do what's called pinning. So that brings up another issue, which is we're in Friday right now, and we're looking forward to what I call the games that the big market makers can play. So what I mean by that is that, over time, if you like Tesla and you focus on it, particularly Fridays is an important day to watch, because most stocks develop sort of a daily movement up and down that the stock might have. And what I think you'll notice is Fridays tend to be different, and the difference tends to be that the prices tend to be depressed slightly as a way to limit how high the price is and render a whole bunch of options worthless. What do I mean by that? So right now we're in the 643 range. I think the last I checked, it was up maybe $3 to $5 in the pre-market. What actually happens is that individuals that want to protect their portfolio, or the opposite, will actually buy options. And so the people who make those options are selling them, and if they expire worthless, they make money because they get to keep the amount that was paid. And so where we are now is that, in essence, the lower the stock price is heading throughout today, the more of the options that are out there that expire today end up worthless. And particularly because earnings were on Wednesday, the options volume for this Friday is particularly high, and it's particularly lucrative to control where that stock price is at. So I'm looking forward to, today for Tesla stock price to be, steady for most of the day, but I'm very much expecting it to be down somewhere between, 5, 10, 15 points. The most awesome thing to see would be if they're able to pull it back to 600, because the number of calls/puts at 600 is actually really large. I just don't think, you'd have to have a market severe down in order for that to happen, and I don't think they'll get it that far. But I do think the day has kind of a negative bias towards price because of the options battle that's going on today. And then I think that once we get into Monday, we're now clear of earnings to some extent, and we have a new, fresh environment where you can control the price of the stock for a half day or so, but when it comes to multiple days control, that's really hard to do when you have a big market cap and large number of institutions that are buying and selling that stock. So we look forward to what's going to happen, and we'll update you on it as we get new info. We're at about 20 minutes. Happy to answer questions. I tried to blend the questions that I saw into the statements I made today, but we're happy to sort of field other questions that you guys might have. Today's Friday, tomorrow's Saturday. We're, given how active the stock is and what options have been doing, et cetera, we just did an options show, and our plan right now is to do another one tomorrow. And the goal is to sort of get folks that haven't traded very much up to speed with more examples of how trading works and how you blend trading with investing, sort of those questions particularly related to Tesla, because when the stock moves as fast as it does, even though you're trying to invest, it's really kind of a trading/investing situation, because you get very big moves in short periods of time, either positive or negative. And it's kind of a good idea to understand the environment better so you know how to manage your finances better in that situation. So at any rate, I wanted to review, I'm too scared to play with options from Mark. Craig Chrome, it's been quite here since Giga 1. What's funny to me, Mark, is that I agree with you about playing with options is dangerous. They're really created as a way for people to be able to hedge their portfolios. So if you have a large amount of money in hand and you want to make sure that if something crazy happens, you don't lose all your money, that's really why it came up. So that's the beauty of options, I think, is that you can be speculative to try to make money with it, but it can also be an excellent vehicle to preserve the value of whatever you've got out there. And so I think it's one of those things where sometimes you'll look at a situation or what's about to happen and having some fluidity across. It's kind of like in sports. I played basketball. Everybody wants the layup because the layup is the easiest shot to shoot, or maybe a dunk in terms of percentages. But it's a good idea to kind of have the ability to shoot a jumper or shoot all the shots, because you'll be surprised at circumstances that might lend itself better to using one skill and not the other. And if you're just totally decapabled in one area, you're kind of limited in terms of how to handle things. Any rate, and by the way, I'm not saying you have to do it. It's one of those things where if you know about a jumper, if you've got the slam dunk, why take the jumper? And so it's one of the things where you sort of add to your knowledge arsenal, and it facilitates, I think, better execution across the board. At any rate, as usual, our health tips are try out 5-2 diet or one or the other. Well, the 5-2 is one of the diets. It's focused on fasting intermittently with regular eating for better mental health as you age, number one. Number two, don't forget 25 leg lifts, etc. As I'm going through this, I just got a comment that said Elon pointed out that it's the batteries. That actually makes sense, but if you go back and listen to what the folks are saying at Panasonic, part of the whole deal with them is that there's been this battle going on where, let's review the point. Number one, as Tesla has moved over to the Model 3, which is good, the battery volume coming out of Japan in terms of the 18650s in the X and S has been declining as those vehicles decline in sales. Panasonic picks up the batteries in the other vehicles, but the key to it, though, is that the volume risk in terms of process Tesla has used when they're light on cash is, in essence, to hand all the losses to their partner and then take all the finish. So losses related to every aspect of their operations, Panasonic is stuck with. So basically what Panasonic said is that, we're not trying to be anticipatory in our build out and production. So when you're building something like batteries in this case, it's not a matter of saying, excuse me, I'd like a few more batteries, send them over. You actually have to build a structure, be it more lines to handle the new production, be it facilities, manpower, etc. So once you build the structure to handle that increased production, you're kind of in a tough position, because if there's lower demand than needed, you now have all these fixed costs / variable costs that you've put in, but you don't have the volume to go into that. So basically what Elon has pointed out is there aren't enough batteries, but I kind of lean in this discussion towards Panasonic, because if Elon isn't guaranteeing a certain volume of consumption, but they want them to build out, I think there's a conflict between the two of them that arrives at this point. I think it's getting worked out, will be worked out, but I do believe that this conversation will get better as Tesla has more cash on hand in the form of better stock prices and better debt structure, because now they could be more of a, I want to say, nice partner rather than a partner that's optimizing their position in the relationship. And so Tesla had to go that route because they just didn't have the cash. And then Panasonic is in the route where you're getting big enough that if you mess up, you could actually tank our company. So I just think that the relationship will get better, and I think the battery volumes will get better as you have a consistent look at demand and over time and how that working relationship is going. So yes, there's a battery problem, but the origin of the battery problem is the fact that you're kind of only now getting Tesla into a success cash position where I think they can be a better partner. True. It was just a point made about the 2170 battery that if they're not being used by Tesla, they could be sold elsewhere. Yeah, but the problem with that analysis is that everybody else is using LG batteries. Tesla's using like 4,000 cells that go into each of the pack for the Model 3. LG's structure that's going into like 80% of the cars that are not Tesla is there. The last time I checked it was initially they were just large packs, of like 10 packs, and that wasn't working well for supercharging. So LG changed that to 568 small packs, which now lend themselves to supercharging. And the problem is if you're producing 2170s and trying to sell them elsewhere in the world, you run into the issue that they won't fit other vehicles because software, thermal management, everything has been set up for the LG structure. So that is a good idea to switch over. But from what we're seeing, I think Rivian is the only other competitor that's using the structure that Tesla is. So that's my input. We're constantly working to improve. We made some changes relative to the sound position. Any comments you guys have on this afterwards would be appreciated because we definitely want to have you be able to hear, see, etc. The only problem I see with today's show is the fact that we do have a fast view of the Model S here behind, and we'll definitely slow that down because it can be distracting. At any rate, thanks once again for joining us. Don't forget 25 leg lifts. Don't go to bed within 4 hours of eating. At minimum 2 hours, let the food digest so there's no other acid issues. Number 3, we've already covered the 5-2 diet option. Number 4, no more than once a week fried foods is another of suggestions given by one of our doctor advisors. At any rate, thanks once again for joining us. This is Greg for Teslafaninsight. Tschüss, German au revoir, French lehitrot, Hebrew Choda Hafez, Farsi, Zdravstvuyte, which is hello in Russian, Ni hao ma, hello in Chinese, Hejdo, Swedish for our friend Donovan, Mark and others, thank you for your comments for the day. Do Virginia, and in Jamaica we say no respect, walk good man. Have a great day. Bye for now, and thanks for joining us.